All right, traders, we are going to be going over the trading plans heading into tomorrow to finish the week strong. I'm going to show you exactly how we are planning to trade the best setups at the best prices. Not only are we going to be going over the SPY, but I'm going to be sharing with you two stocks that are going to be on my radar heading into tomorrow for potential trades if these key levels can react bearish. Before we get into today's video, make sure you go back and watch the previous video that I posted a couple hours ago. That shows you the live trading footage today, where I ended up making a 50% profit return on SPY puts in 2 single minutes. Let's get straight into the analysis. So first things first, we're going to start off with SPY, then we're going to get into the top 2 stocks that I'm watching for tomorrow. So in terms of SPY, what you need to understand is in terms of the macro, in terms of the overall trend direction, it has been triggered bearish, and we are extremely macro bearish. Yes, there can be some micro spikes because it is a little micro oversold for the short term being, and it's due for some sort of spike. But with that being said, the opportunity is going to be trading the overall macro trend by focusing on put options at key spiking levels and key gap fill levels, and I'm going to give you those levels within this video. So in terms of what triggered the macro crash, we had a gap to fill above at 399.40. As you know, it reacted bearish, and I ended up swing trading puts. I ended up making a 40% profit return swing trading those puts using the bearish confirmation for the gap close reversal. This then triggered a massive opportunity for the macro crash to start to kick in. The macro trend has kicked in bearish, and it's been bearish as we're in this bear market, but it kicked in once the gap filled and once we hit the key whole round $400 level. So like I said, now that it's super macro bearish trading at resistance on daily, we're going to want to focus on puts at spike. That's the overall macro trend. So Will, what are the key levels that we need to focus on? So I'm going to share with you 3 levels that I'm looking at. So first things first, what I want you to understand is I don't always trade at the previous closing price. The problem with the previous closing price right now is, yes, it is useful, but in terms of for me to enter a trade at 388.64 for puts, it's not that appealing because we're at such a lower level. Yes, I'm aware that it can drop, and I'm well aware that we can continue to go down, but I am very strategic with my levels, and I would much rather wait for a bigger spike. So with that being said, these are my key levels. I'm going to be disregarding the 388.64 heading into tomorrow. I'm not really interested in trading at this level. Another reason why is not just because it's micro oversold, but I've studied how SPY reacts when it is towards some micro support and it forms this like trend reversal bearish candlestick. I've studied how it reacts, and basically what the chart is telling me is, see how it has this massive pullback right here for 3 days straight, and then it spikes right back up, right? The chart is telling me it's due for some sort of micro spike, and when it does have that micro spike, it's likely going to be a good opportunity for puts. So now that we have a sense on why we should kind of avoid puts at this specific price, because we don't want to chase and try to make a quick buck, we want to get the best set of best prices, right? What would we want to focus on? So here's my 3 levels. The first level is 391.49. What I dislike about 391.49 is it already had 2 partial gap close reversals. It sold off in the pre-market at this level, and then right here it sold off at this level. I played puts right here, ended up making 50% profit return in 2 minutes. So what I dislike about it is it already worked twice. That's what I disliked about it. But the gap has not filled yet. There's a gap to fill above at 391.49. That is going to be the first key level. And in terms of the key levels that I'm giving you, that is going to be the lowest one and not the best one. So Will, what are the other 2 levels? The other 2 levels that I'm very interested in, now what I dislike about these levels is it's not the gap strategy. It's basic price action, and it's basic support and resistance. The lower level is the gap strategy, but it's already been playing out, but it could still work. So if it reacts bearish, I will look to scalp a put at 391.50 with a max risk of 392. Now, in terms of my other levels that I'm very interested in, we had very strong previous support that has now cracked, and it never really had the opportunity to react as a resistance level. It basically just sold off. And this is the level that I'm talking about. You could see right here we had a very strong double bottom, very strong support at $393. When this reacted as a resistance level right here, it sold off massively. When this reacted as a support level, it had a very nice breakout. And as you can see, once it starts to break down and react as a resistance, it sells off massively, right? So with that being said, I would be interested in potentially scalping a put, not the best setup at the best price, not the gap trading strategy, nothing special, but for the first time, for the first initial retest, when it hits this 393 previous support, it is likely to have a small pullback. Remember, these are very quick scalps where I'm doing at the money strikes, typically same day expirations, and I'm getting in and out within 20 minutes. So within 20 minutes on the SPY, I'm looking for like a 50 cent to a dollar move in my favor, and that could yield me a very nice 30 to 50% profit return on same day expirations. That's how I'm trading these levels. I'm not holding for longer than 20 minutes. So with that being said, 393 is our second level. Now, in terms of our best overall level, that is very unlikely to hit tomorrow, but I want you to save this for next week, is going to be this 396.50. This was very strong support at 396.50 to 397. You remember that strong support in previous videos? Well, when it cracked, it had an absolute bloodbath. So when it retests 396.50 to 397 for the first time, that should be a great opportunity for puts, right? So our key levels, 391.49, potential small gap close reversal. What I dislike about that is it's already been working multiple times, so it's just bound to try to break out because we are at some support. And it is a little oversold for the micro. And in terms of 393, that's a level of interest, nothing special. In terms of 396.50, it is not a gap level, but I really do like that opportunity for puts at 396.50, right? So that's the game, man. And that's what I'm waiting for. I'm not trying to chase. I'm not trying to play it at a lower price. If 388.64 does crack and react as a resistance, it's going to retest the lows. If it cracks the lows, then it goes to 386. If you're looking for the best price possible to really kind of scalp calls for the micro scalp, 384 is a key level of interest. 384 was very, very strong resistance, and it was never retested. This is very strong 384 resistance, 384 resistance. When it had a breakout, it triggered a massive move to the upside. When it goes back to this previous resistance level at 384, that's going to be a great dip buy and scalping opportunity, but that's just basic support level where these should all work with initial reactions, with the first reaction only for small micro trend reversal. The true best level for calls with my strategy is right here. There's a gap to fill below at 379.38, right? So that's the game. That's my levels. If they hit and I get the reaction I'm looking for, so on the higher levels, on the spikes, if it's forming a roof, if it's forming a bearish confirmation, I'll do a quick scalp on puts, right? And obviously, if it's at a much better level, I'm going to take a slightly bigger position size. And if it goes to the oversold levels, which likely isn't going to happen in terms of tomorrow, but if it does hit 384 tomorrow, it's likely going to be a good scalping opportunity for calls. But in terms of my strategy and the best setup at the best price heading into next week, 379.38 for calls and 396.50 for puts. That's the game, man. We're trading the best setups at the best prices. We're waiting for the moves to develop. We're not interested in chop in between. So when the SPY is not at the best levels to be trading at, this is where you need to tell yourself, all right, if I want to enter a trade, then I'm going to have to find stocks that correlate with the trading strategy. And that is something that I ended up doing because I'm not liking the levels that SPY is currently at right now because we're kind of in the middle of the channel and it just had a massive overreaction to the downside and puts have been printing like crazy. So with that being said, they're going to be dried up, man. I want to wait for some sort of big spike to get back in, right? And I don't want to buy calls into this macro bear market and fight the macro trend unless we hit a very nice ideal support level towards 384 to 379.38 best price with my strategy, right? So there's stocks that haven't had a massive crash like SPY, and they're going to have delayed reactions, and they're going to crash with SPY. They're just going to have a delay with it. And I've already been hitting them. In terms of today, within the chat room, I ended up playing puts on ULTA. I bought puts on ULTA at 9:40 a.m. Those puts went up 40% in 10 single minutes. I bought puts right here at 9:40 a.m. when this was trading at 497. I bought a 495 put strike. Those printed like crazy. ULTA dropped 11 points from my entry on the day. It was a crazy trade, man. The reason why I took that trade is it partially filled the gap at $500 and formed a bearish reaction. Plus, the daily candle was not looking bullish. This right here at a nice key hole round $500 number is overall bearish with this wick. And if it forms lower highs and reacts bearish at the previous closing price, I'm going to be scalping puts to play for this gap that's waiting to fill below at 490, 459. And if that gap cracks, then it's going to go to the next gap that's waiting to fill below at 488.62. That's the game, man. One of my best trades last year was shorting the top of a nice key whole round $500 number on mRNA, on Moderna stock. When Moderna stock was trading right here at $497, I ended up playing puts. I made a very nice return on those puts. It was like 1,000% gain, man. It was a 1,500% gain swing trading puts. I had puts, they were a little bit out of the money. I ended up swing trading them when it was in the 490s. Absolutely banked on that with that nice key whole round $500 number. Just like SPY earlier last year in 2022 when it was nearly at $500. Look at this same exact pattern on SPY with this ULTA. Look at this candlestick here. Look at this candlestick here. Same nice whole round $500 number. Compare it to ULTA. It's the same exact pattern. You will always see me do that at those nice key whole round $400, $500 numbers with the strategy, right? So in terms of ULTA, my update for it is this just triggered super bearish. And we're at a make or break key level. The make or break key level on this ULTA is this 483 resistance. If this 484 resistance cracks, it's going to be a bloodbath, man. If this 484 cracks, it's going to be an absolute bloodbath here on a ULTA. So the best price for puts is to wait for the gap to fill. There's still a gap to fill at $500.08. That's the best price. Now, I am interested in potentially getting in at a lower price. I'm willing to do it on this one because it's still extremely overbought. If I see 488 react as a resistance level, I will look to scalp puts heading into tomorrow with a max risk of around 490. And then if it goes to 500, I'm going to hit it with size. That's the best price at the best setup. That's literally the highest gap to fill above at all-time highs with a nice key whole round number, and there's nice downside potentials. Another reason why I like this ULTA, and this was a swing trade originally, but I made so much profit in such a quick period of time that I decided to just day trade it. But anyways, with that being said, these were the all-time highs on ULTA at 451. It breaks above the all-time highs, doesn't go too much higher, and then it sells right back off. These are the all-time highs right here at 482. It breaks above that 482, tops at 500, then it starts to sell off. This was another one I absolutely crushed within the chat room when it hit 500. Every single time this limit stock was hitting this 490, just like Moderna in the 490s, just like SPY, just like ULTA. Every single time it was forming bearish confirmations and selling. I said it's just a matter of time before this stock gets destroyed. This was such a phenomenal opportunity for puts, man. I called this out way far in advance. That was another killer swing trading opportunity. There's a lot of great passive income swing trading opportunities. Now, I'm going to save one of the best ones for last. I'm keeping an eye on Alibaba. So this is what I like about Alibaba, and we're going to go over some of the basics in terms of the strategy. Let me show you exactly what it is that I'm talking about and what I'll be watching for tomorrow. This is another one that I ended up trading in the chat. I ended up making 7 trades in total today. 6 were wins, 1 was a smaller loss, and it was a phenomenal day, man. It was a 5-figure day for me. But with that being said, this is what I'm looking at on Alibaba. So in terms of Alibaba, this is what I like to see. I'd like to see an oversold and an overbought channel with big overreactions, big gap ups, big gap downs. This is what I love. This is the beauty of the strategy. Let me show you. See how the top of the channel, the resistance is at 117. So find a stock that gaps up. See how Alibaba gaps up and it opens up higher than it previously closes. Then it sells off very, very nicely, and it nearly fills that gap that's waiting to fill below 113 from this 117 resistance, right? Then it spikes back up and gaps down. Now, this is the opportunity. This is the opportunity. Write this down. Find a stock that has a very nice gap up, and then you look for a hard sell-off. Then from there, wait for it to gap down. And when it gaps down, wait for it to rip back up towards that previous resistance. If that gap down right here, that previous closing price, is towards that previous resistance level, you hit the puts. History repeats itself. The stock has a gap close reversal, get you in at the exact top, and then it starts to go back down to the support to fill the gap below. And look at this, it worked both ways. The gap was waiting to fill below at 113. It was already bouncing off of 114 and having very nice moves to the upside. So once it fills the gap at 113, you have bullish reactions, gap close reversal, then it gaps up again. And look at this, it worked multiple times. You have this gap to fill at 117. Right here, it worked. It gapped up and it worked. On this day, it gapped up and it worked again. On this day, it gapped up and worked again today. Look at how many times you could have played puts at 117. You guys need to wake up and recognize the opportunity and the potential that this strategy has, because it is getting you in at the exact top. There is no single indicator. There is no other strategy that's going to get you in at the exact top. This is the best trend reversal strategy that I've ever come across. And this is something that I've created. It's called gap close reversals. Not all gap close reversals are created equally. You have to be very strategic and use confirmations in terms of how you trade them. But this is a great example of where you should take a picture and frame this, because this is what we're looking for. We're looking for very strong oversold and overbought channels, supply and demand zones, right? We're looking for strong gap ups. We're looking for strong gap downs, right? So right here, it has a gap up, massive resistance, sells off. If it goes back to the resistance and then gaps down at that resistance, you better believe when it spikes back up instantly for the overreaction to the upside, I'm playing puts right here. And when it gaps up again, hits the level, I'm playing puts again. When it gaps up and hits the level, I'm playing puts again. Rinse and repeat, man. You could have scalped puts 1, 2, 3, 4, 5, 6 times. I ended up scalping puts only once because I was only aware of this stock once when I was at this key level today. I bought puts right here at the lower high at 116.50, ended up making a very nice profit percentage return on that trade, selling towards the dip. With that being said, we are approaching the gap once again. So the gap is at 117.01. That's the make or break level. Now, what I dislike about this trade is it has already worked several times, right? It can only work so many times before it stops working or it just finally gets slammed and fills this gap that's waiting to fill below at 113.22, which would be the best price to buy the dip and buy the call options, not at the top, right? But it can only work so many times at resistance. So you can keep on hitting it, and then when you get stopped out, you get stopped out. You cut the loss. If it breaks above like 117.40 here, you get stopped out, you cut the loss. Look at all the times you would have won, right? It's just we're a little bit late in the game because I already hit it once. It'd be a lot better if I hit it like 5-6 times in a row, which I could have done if I was watching it at the time. But with that being said, this is the game plan, man. Here's what I like. Here's what I dislike. I like how right before the close, it topped at 117 towards the gap. I like how it's been selling off multiple times at this resistance level. That's what I like. What I dislike is it keeps trying to push above resistance, but it's still faking out. Now, what I love about this play the most, and this is the main reason why I would consider playing this, is because there is a gap to fill below. That's what makes the trade so much better. There's a gap to fill below at 113.22. It wasn't too long ago, literally yesterday, this was at 113, right? It's already faking out multiple times. So, Will, what's going to be the confirmation to buy puts on Alibaba? This is going to be the confirmation, man. Let's ignore 117. Forget about 117. I want you to forget about 117. What we're going to do is we're going to focus on the previous closing price, 116.58. If it goes green to red, if it's turning 116.50s into resistance, it's gonna be puts, man. I'm telling you, if this can go green to red and react as a resistance, form a roof at 116.58, not only should it test this 115 support, but it should crack that support and sell off to 114, which would be the max profit target. You don't want to aim all the way down for the gap to fill below. That's being way too greedy. So the price targets on that trade would be 115 to 114. You guys already know me. I'm going to be scaling out very, very nicely at 115. If I leave anything on to ride, it's just small YOLO size, 20, 30% of the position for 114. And then you hit calls at 113.22. That's the game. Take a picture of this chart. You need to trade the best setups at the best prices. You need to wait for the channels to develop, man. Look at this, man. There was a gap to fill right here in the middle. There was a gap to fill below right here in the middle. And you're probably thinking, oh, let's buy some calls. No, it's in the middle of the channel. It didn't work here. It didn't have a reversal here. It crashed. There was no reversal when it fills this gap. But there was a reversal when it fills this gap because it's the higher gap on the top of the channel. And there was a reversal when it filled the lower gap because that's the bottom of the channel. Don't you understand? The middle is the chop. That's the profit taking. That's where the smart people who are buying the dip at the gap close reversal here are locking in profits when it spikes back up to the middle. And the smart people who are buying the puts and shorting the top right here are locking in gains towards the middle because they're not too greedy and they trade the best setups at the best prices. You must lock in gains. Imagine if I didn't lock in gains. I went short right here towards the gap. Imagine if I didn't lock in gains. I would have gave back all my profit and I would have been right on the day. That's not the game. These traders who comment, oh my gosh, if you would have held that put option, man, you would have made so much more money. That's not the game, man. I'm not holding. Do you realize if I were to hold every single option trade that I would make, Probably 80% of them would be losses. I get out within 5 to 20 minutes. I stack my 30 to 50% gains with decent size. I compound the count and it adds up quickly. I'm a scalper. It's extremely hard to make money holding options. You have to scalp. That's the game, man. I'm putting you onto the game. I'm putting you onto the targets. I'm putting you onto the best setups, the best prices. Who is showing you this? Who is showing you this picture right now? This work of art, this frame that you should literally get framed, because this is what we're looking at. And then it's more than this, right? It's overbought and oversold. Take a look at this. Look at Alibaba in terms of the resistance. Alibaba has this resistance right here. There's a gap to fill above. It fills the gap. It sells off nicely for a swing trade and put opportunity. Alibaba has a gap to fill here at that same resistance level. It fills the gap. It sells off for a nice opportunity. Alibaba has a new gap to fill right here at 120.27, which is the best level for put options to short. You better believe I'm going to be interested in that gap, man. You have to focus on overbought and oversold. You have to focus on top end and high end of the channels. This is the game, man. Now, in terms of this candlestick that Alibaba's forming, it's a little tricky. It's giving off the vibe of the ULTA candle, but it's a little tricky. So what we're going to have to do is we're just going to have to see if it can go green to red. If it goes green to red and forms a roof, it forms resistance, it forms lower highs. When it does that, then it's puts. If it does not go green to red and form a roof at 116.58, there is no reason for puts. It can only work so many times. And in terms of calls, 113.22. With that being said, that is how you trade the best setups at the best prices. I hope you guys enjoyed this video lesson and learned a lot. If you do want to be a part of my private organization, Trader Society, all the information is down below. It's that first link in the description. Once you join, you get lifetime access. It's a one-time fee. You get access to the live trading streams. You get access to the price alerts. You get access to my real-time trade alerts. You get access to the confirmations. You get access to the chat room, the network, the video lesson library, the course. There's so much more to it. If you want to get started on your education, invest into yourself, the opportunity is down below. I will see you within the chat tomorrow.